Big one. Look, guys, Ethereum, they're having issues, and it's the miners' fault. It's your fault. You know, they moved to proof of stake. Yes. You know, maybe you thought you would think that, you know, the problem would be with the validators or the users or the developers now, but no. No, sir. No, sir. Ethereum struggles are directly related to the miners still because, well, what have they done since the inception of Ethereum? Blame the miners for literally everything. And that continues to be true. Ethereum Miners' $319 million crypto hoard hangs over the market after the merge. Miners dumped over 16,000 ETH worth more than 20 million in the past week, on-chain data shows. No, really? Oh my God. We talked about this yesterday, and basically the idea of cross-pollination that miners basically have. Miners are essentially the bees that pollinate the cryptocurrency that they work for. And, you know, at the same, that was what was happening on Ethereum. The reason why there were so many transactions on Ethereum pre-merge and not as many post-merge is because a lot of what was going on between, you know, layer 2 side chain payouts, processing transactions back to layer 1, decentralized finance and the liquidity pools that were involved with participating in that, the borrowing on Aave of miners' money to buy more rigs, all of that stuff came from the miners. And the miners aren't there anymore. So what are the miners doing instead? Well, they're just dumping their Ethereum. And they have more to dump. The Ethereum miners still have about 245,000 Ethereum left and no longer any business affiliation with the blockchain network. In the years and months leading up to the Ethereum's blockchain's historic shift last week to a more energy efficient system, data miners working for rewards on the network had accumulated nearly $341 million worth of cryptocurrency Ether. Now, a week after the merge, crypto analysts are warning that miner sales of their hoards could become a source of near-term downward pressure on the cryptocurrency's price, with the market already sinking by 19% in the past month. Miners dumping their ETH is an overhang that we'll have to get through over the coming months in order to resume up-only mode, but it will happen. I have a different theory. Yes, I think miners add selling pressure, but I think miners aren't selling at a loss to their electricity. So I think the only thing keeping the Ethereum price from not going down to $762, which is my little prediction, by the way, is the fact that miners still have ETH that they're dumping, and they are not dumping it at a loss to their electricity costs. As soon as the rest of the 245,000 ETH is liquidated from the Ethereum market and the miners have paid their electricity bills, Ethereum has no reason to maintain price outside of basically monetary manipulation, making it deflationary. Blockchain data assembled by OKLink appears to show miners starting to sell down their stashes over the past week. Ethereum miners dumped over 16,000 Ethereum from September 12th to September 19th. The decline reduced the miners' combined balance to about 245,000 ETH. That's a lot of ETH left over, and that's a $319 million worth. Lucas Otomuro, head of research at Into the Block, attributed the decline to balances to miners moving on to other chains. The thing is if we're realistic about it, most miners aren't able to move to other chains now. As we've been monitoring the hash rate, it looks like more and more, over half of the hash rate that was on Ethereum has been just turned off at this point. And there's probably currently the market can't handle even the amount of hash rate that's on the networks. And if we really start to put, you know, the detective work down on things like mining pool stats, etc., you know, it's not completely unheard of that we will see, I think 90% of the mining hash power get shut off in a little while. You know, especially with things like Ergo can't take on any additional hash rate and offer any incentives to miners. Ethereum Classic's completely flooded by ASICs, and no GPU miners are touching it with a 10-foot pole at this point. You got, you know, possibly Ravencoin, but still sitting in, frankly, too hot a weather, in my humble opinion, for a lot of miners, at least from what I've heard. It's also not profitable. And the amount of GitHub commits need to be upped, I think, on the Ravencoin project. But we'll talk about that later because we are going to be talking to some Ravencoin people. And then if we look at all the rest of the projects, you know, Flux is probably, you know, as far as like GPU mineable, in the best position right now. I think it was definitely the most prepared. But, you know, it's still not profitable. And then if you are trying to bounce around the smaller projects and do all that, I think you're more at a whole miner level. That's kind of just what I'm seeing right now. So he says they're taking profits from their ETH holdings, he said. It's also possible that some miners may have sent some Ether to exchanges to handle an airdrop of new tokens from a splintered blockchain that aim to continue on with the Ethereum blockchain's now abandoned proof of work system. That effort since mostly fizzled. Ether's price had soared in the weeks before the merge as some traders also jockeyed for the airdrop, while others speculated that the shift might lead to a surge in institutional investment. But when the merge actually took place, the cryptocurrency's price suddenly plunged in what analysts term a buy the rumor, sell the fact market reaction. The sell-off also coincided with the run-up to this week's Federal Reserve's meeting, which included a pledge to aggressive monetary policy that has put downward pressure on risky asset prices from stocks to cryptocurrencies. Quote, if miners had accumulated Ethereum at profit, or they need to pay for their electric bill, they would be incentivized to sell at a profit, especially with the expected and actual increased volatility, said Alexandra Lores, director of blockchain market research at Quantum Economics. For the first time, these miners have no future business relationship with Ethereum, Lores said. It's possible that miners' move may have contributed to the immediate weaknesses in the prices post-merge, according to Jeff Dorman, Chief Investment Officer of digital asset management firm Arca. The Ether price was trading around $1,300 on Thursday. It's not a sure thing that all miners will liquidate their holdings, Dorman said. Maybe some miners will turn into speculators and hold for a better price. Maybe some will turn into stakers and secure the network. But that mining business is over. The new network relies on stakers, investors who help secure the blockchain by staking their Ether instead of energy-intensive proof-of-work mining the Ethereum previously used. To be sure, the miners' remaining holdings represent a fraction of the total ETH supply of 119 million based on CoinDesk data. Ex-Ethereum miners who choose to continue proof-of-work mining can shift to a different chain. Related altcoin prices have seen significant increases, with Ravencoin being up 64%, we'll verify that in a second, and Ethereum Classic up 75% in the past 90 days. Chain analysis economist, Ethan McMohan, said he sees the miners selling as a temporary shift in moving away from Ethereum. If miners' initial reason for holding Ethereum was for the store of value or investment purposes. Yeah, here's the deal. Like I said, once it's sold off, I don't know what holds up the value of Ethereum. You tell me. Well, I'll tell you what does, by the way. I actually do know. Ethereum there was a very specific manipulation of the monetary policy that was put into place pre-merge with EIP 1559 that was specifically put in to address the problem of the fact that there would be no direct relation to real-world cost in the minting of new Ethereum. So what they had to do to make sure that Ethereum holds some sort of price is that they had to add a burn mechanism that would make Ethereum go deflationary. And once it moved to proof of stake, they removed the minting process as well. So this is basically how you manipulate the monetary policy to compensate, hopefully, right, in theory, for no longer having a real world tie to any value for the coin. So that's why they did it, right? That, like, they're not stupid. This is why Ethereum is supposed to be deflationary and not have any more minted in. That's just the way it goes. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.